Guys, listen, we are here in another Discord meeting. We're already hot on some topics. I figured I'd hit record now. I hope you guys love and you stick around for this because we always have these beautiful meetings. And tonight we're going to go over some Christian Quilamagi stuff. We're going to go over our own trend breakouts. And we're already starting to talk right now about how far back do we go on these trend breakouts. So right now, we're looking at Wolf. This is on the weekly time frame. And so, yeah, Dan Bob, yeah. Now that we got the video running, because I think this is all great content. We can all go back and look at this. You know, this is, you know, it's a huge trend, but this TerraWolf, this is a minor, right? And price action is what we're looking for, right? We want to use these moving averages, like I was saying before. We want to use them as guidance, but if it breaks a trend on higher volume and then the moving averages start to work out, why do we have to use any of this information? As long as it's holding an ascending trend and it's breaking out of its downtrend, it's still the same subject. Like if we look at the monthly even, you know, the monthly even, like if we just looked at this, just the monthly, we would say this is our setup on NNE. You know, this looks a lot like, no, please do. For WULF. Okay, now that would make a lot of sense. Yeah. Yeah, that would make sense. You know, I can't see what the RS was then. Do you have? Okay. I think that would be pretty helpful if we could figure out. Well, isn't there another? No, that's ADR. Because that would be really helpful studying these, because then we could give some leeway to the RS. You know what I mean? But even then, I would imagine the RS on the breakout though, here was probably 99. Or here it was probably still above 90, I would imagine. I don't know. So WULF I took right here on this green line because I missed the initial trend breakout, so I played a base breakout on this. So I got into this. I'd have to go back to my trader sync, the recording. What's that? Can you say that? Can you say that one more time? Well, that's what we're always trying to get through, right? Is resistance. So I took it on volume, right? So it broke through its trend line, which is showing resistance, right? And it broke through on volume here. So this would have been the take through that resistance on volume. Now here's its first area of resistance through the trend line. And you can see it broke through the trend line on volume. So yes, I'm looking for those resistance to be broken, because if they break, then we go up to the next area of resistance, which on my chart is showing this would have been the next area of resistance at $3. And it just blew through that, came back, retested that $3 area, and then jumped off the page, you know? So now it's all the way up to 450. It's doing really, really good, you know? And if we look at the volume previous to this, like all of this volume from 35 when it sold all the way off and traded sideways, there is no really overhead volume. This trend that it created, this is where all the volume was traded, right here in its trend area. You can see, look at all this volume here, humongous volume, right? And then if we look back at all this previous, you can see down here, there is no flipping volume down here. So it's showing me that the price action is in this area, meaning if we buy in this area, anywhere in this area, it's actually being backed by price action. You know what I mean? So that's one way to look at it. Okay. Well, guys, we already got started. So I just want to say, first of all, I hope you guys all had an amazing day. The weather was absolutely beautiful out here. I don't know if you guys like it like I like it, but I like it hot. I like it hot, baby. It looks like we got somebody new in here. King Julian Son of Froma. What's going on, brother? I'm glad you've made it. I hope you enjoy the meeting tonight. We're doing it a little different. Instead of going through the state of the market and all that stuff, we're actually going to study this big guy's mustache and how he gets it that way. No, we're actually going to go through his swing trading school. We have plenty of setups that are in front of us. We're going to kind of go through. I'm not going to go over anything, any of the shorts that he does. I'm not going to go over any base breakouts that I don't thoroughly understand. Now, and there's a huge reason why I do that, because I'm not going to try and bullshit my way or try to lie to you guys to show you, hey, I know something that I don't. I'm not trying to teach something that I don't. And Christian Quilamagi is beyond all of us. He's made millions. Dan Bob was actually, he reached out to me and he said, hey, can you explain this? And then he said, you know, it seems like the way he explains things is like we're already supposed to know. And that's because he's on a whole new level. And so that's why it's nice to have middlemen like Covey and I, where we have studied him, but we're still new enough that we can remember where we started, what we forgot. Like, well, what is ADR? Well, if you don't know, ask and we'll explain it to you, right? Or go through my swing trading school where we explain all this crap, you know? But that's why we're having these meetings tonight. So if anything pops up, be sure to ask, guys. We want you guys to learn, and the more we repeat it, the easier it is on us to remember ourselves. So we're going to go through this, and at any time, if you guys have any questions, just ask, okay? So this is his swing trading school. It's actually a video. We have it posted in our resources. This is going to be mandatory to watch along with our base and trend breakout videos. Those are going to be mandatory things that you have to watch. And if you haven't watched them already, you're really doing yourself a disservice, because being in this group, this is what we focus on. We are momentum traders. We trade the momentum. We only trade stocks that are heading higher. And the whole reason behind that is because a stock that's in a trend, if we buy at the right price, it's going to continue to head higher. And if it doesn't, we cut our losses quick, okay? There's going to be a lot of trends. You're probably going to, you will lose more than you will win. But that's why we use risk management, because our losses are small and our wins are big. So you need to have that same mentality, okay? So we're going to jump right into this. And I think what we can do, Dan, I'm just going to bring up that video that you sent me. I'll start with that so you guys can see exactly what we're talking about, okay? So this is Dan, Bob, and I.
Was the entry. The average true range on this thing is 16 cents. A low of the day is one.
All right, check it out. I'm just going to pause it here. Everybody can see this on my screen, right? The Quilamagi Trading School. Can everybody see this?
Yep.
Okay, cool. So what he is showing you right now is we get a big move up and a pullback. I'm assuming this move here was probably earnings or something, where it gets pushed way up here and gets pulled right back down, but still is finding support on this ascending trend. Okay, this is the daily. Usually he uses the hourly here. So here's the hourly. Here's what the daily looks like. You can see it was in a big downtrend, big push up on volume. Okay, another big push up on volume, gets pulled back and forms an ascending trend line, just like we've seen in WULF. Now, if we look over here on the right-hand side, this is the hourly. You can see here is that ascending trend line, meaning the trend line that's moving up, and you can see a base top right here, okay? Or you can draw another trend line from the top of this peak down to here. I don't care how you draw it, just pay attention. You know, there's two ways to take this. Either way, they both end up right here at this 172. So you'll hear Christian talk a little bit about this, and then we're going to go over it.
72. So your entry was no higher than, let's see, 188. No higher than 188 should have been your entry.
So he is saying your entry would be right here at this base breakout, but you do not want to chase this stock. So where is he allowing you to get in? All the way up here to 188. Okay, so he's saying 172 is the buy area, but you can buy all the way up to 188, and here's why.
Because one of my rules is that the stop shouldn't be higher than the average true range. And yes, I put...
So he is saying your stop should not be higher than the average true range, okay? So there's two differences here. There's average daily range and there's average true range. Okay, so the average daily range is taking the average price during the day, and it's calculating that and putting it into a percentage. That's what we use, the average daily range. He uses average true range apparently on this, and that is taking only during the day. I believe only during the day. I could have that wrong, and correct me if I'm wrong there, Covey. But either way, guys, that's why we practice. Dan, Bob, you got something? I'm sorry, buddy.
The ATR is the pre-market and post-market and the day.
So it pulls everything in, right?
Everything.
Okay. So there's average true range, which pulls in all the market data, and then the average daily range, which we recommend that you use, takes the average range throughout the day so that way you can calculate what the range is for the day. Okay, so if we look at our chart here, and we'll use Wolf as the example because it looks similar to TTOO, which, by the way, TTOO is probably a pretty shit relative strength indicator on this. But Wolf here, when we had this ascending triangle and this breakout, we can see the average daily range is 12.8%. Okay, so if I said right here is your breakout at 1254, and we wanted to use the low of the day, the low of the day is only 15%. Oh, wow, it's actually 15%. So this one would have been a good take. So that might have been the reason why I didn't take it there, actually, now that we're talking about it, because the average daily range is too large. Okay, so let's explain that. This is a great example, actually. So I'm gonna zoom in on this. Now remember, guys, this is what we're looking at. We're looking at this huge triangle here, right? So if we zoom in on this, right where the breakout is, this would have been the buy-in area. If we would have bought in on this day, to use that low of day, that range would have been 15%. Okay, 15% of that stock, when the average daily range is 12.8%. Okay, one of Christian Koulimagi's rules is you do not buy a stock if your stop loss is going to be larger than the average daily range. This would have been 15% on this candle. So the next day you could have played like an opening range break, or you could have taken it early in the morning at some time and then use that low of day. There's multiple ways to take it from there, but your average daily range needs to be lower than your stop loss. Does that make sense, guys?
A smaller number, you mean?
Yeah, so this is the average daily range that I have calculated here. Okay, you can also see that on your trader view. You can add average daily range by going to indicators. You can ADR and then type percentage. And then I use this one, ATR LOD distance table. And then you can look at the top right here, the very top right of my screen right here. You can see it's 12.84%. Okay, so that indicator right here is ADR percentage / ATR / LOD distance table by Armour Schuckler. That is how you can see it on your trader view if you guys don't have Thinkorswim. Okay, so you want to make sure the ADR is lower or equal to your stop loss. Okay, and we usually use either previous day's low or the day's low. So, for example, on this trade, when I took this base breakout, you can see here, I got in at this green line at 281 and my risk was low of day at 272. So if we measure that, you can see it's 3.41%. On a 12.8% stock, that is absolutely glorious. Absolutely glorious, okay? Now, mind you, I know exactly what happened. This yellow line is where I took out 2R. I let the stock trade. I let the stock play out, and it came right back down right here, and it stopped me out for break even on this last piece. Okay? So I stopped out for break even. That's what happened on this trade. And you can see it still continued to run. We could argue if that was a smart thing for me to do or not. In hindsight, no. But with the volume that was on that push off, maybe I should have gave it a little bit more room. Okay? And maybe there were some outside influences that helped me take action on this. Okay? So there are multiple reasons why I could have got out of that. I don't have my trading journal out right now to look and see. I don't think I wrote a trading journal on this specific trade. Okay, but that's why it's good, because if I'm sitting here bullshitting you about it, it'd be nice to go back, look at the exact trade, the date, and my thoughts on it. So, any more questions on that ADR, guys? No. How many people we got in here today? Let's see, 1, 2, 3, 4, 5, 6, 7, 8, 9. We got 10 of you. What's up, Yosef? Zamora's here. Will, what's going on? Will, good to see you. I've already said hi to the rest of you. It's good to see you.
Hey,
guys,
Dave.
though.
I got a question, but it's not about the ADR.
Go for it.
Yeah, while I was watching the video earlier, he was saying on his daily, he uses simple moving averages, and then on the 1 hour, he uses exponential.
Sure.
Is there a reasoning, or do you do that? Or
So the difference between simple and exponential is simple takes a little bit longer for that data to kind of come together, where exponential takes that data immediately. Like, it takes that data. The simple kind of smooths the data out, and the exponential is a lot quicker. So I use IBDs, exponential moving averages, on the 10, 21, and 30. On the 50 and the 200, I smooth it out with the simple. Okay. And I do that specifically because Investors Business Daily does. And I like to use their guidance specifically on the S&P 500 for stage analysis. So that's what I use. That's just what I use. It does not matter. I don't want you guys to get too caught up on this. I don't want you to get too caught up on the moving averages, or what moving averages to use, or, anything like that. I don't care if you use the 9, the 11, and the 30. Whatever you're going to use, make sure you're using them on, I'm going to recommend using them on one time frame. I only use them on the daily. I don't use them on anything else. I'm not looking at a 21 EMA on the 1 minute time frame, or the daily time, or on the hourly time frame. There's no reason for that. I want to know where the stock is at in one time frame, and that for me is the daily. I don't look at it on the hourly. A matter of fact, if you look at my charts, this is the daily, but if you look at my hourly charts, I don't have this. Actually, this moving average can come off here. That was experimental. But I don't have any moving averages on this chart, because I want this chart to look clean. I just want to see price action on my hourly. Okay. That's all I want to see. I don't need any more data, because if I look at the daily, I can see where the stock is. It's extended from the 10-day moving average. This actually looks a lot like the S&P 500 on the daily time frame. If we look at this, that's all the information I need to know, and I'm trying to keep it as simple as I can. So if I move on to the hourly, I don't care where the stock sits on the hourly. I care where it sits on the daily. Is that a good way to answer your question, Stewie?
yeah, absolutely. I was
Okay.
just like I said, watching the video before he
Yeah.
was talking about it, and I just was
And
wondering if that's what you did as well. But
Yeah, I think at some point in time in his videos, he does talk about moving averages, and he says pretty much the same thing I did, where you don't want to get caught up on what you're using. It's just using it to help you understand where the stock is. Don't go switching them constantly, though. If you're using a moving average and you get used to certain moving averages, that's what you want to look at your 1,000 charts a day on. You want to go through all your charts and see where they're at in reference to those moving averages. So that's actually a really good question. I'm glad you brought that up.
Well, he says also just to use 3. He said you don't need any more than 3.
Mm-hmm. Yeah, and he's right. I think he used the 10, 21, 30, and 50, though. But yeah, no, maybe he doesn't use the 50. 10, 21, and 30, I think he might use. I don't know. We're gonna go over some of his setups, but
Yeah, thanks, man.
yeah, no problem, dude. Any more questions before we start diving into this? Okay, so this is we're gonna just read through these, and then I'm gonna stop on a few and we can talk about them. So he says QQQ is gapping up here. We can go parabolic from this little flag here. Pretty amazing. So he's looking at the indice. He's actually doing what we do every single day when we come onto this Discord or I go live. He is taking Stan Weinstein's stage analysis. He's looking at the chart. He's trying to get an understanding of where the chart might go. So now he's looking at this and he's saying, hey, we might actually head higher on this little flag here. So he's looking at this little flag, if you imagine a flag drawn out here, and he said we might just go parabolic from here because we're trending to the north side. We create a flag, and he's saying we possibly could go higher here. So he's doing some stage analysis. Now he's looking at TWTR, flagging nicely after its earnings, 20 days starting to catch up. So now he's looking at this on the daily here. He's looking at the earnings. I'm imagining that this is the earnings. I don't see him on here. Let's see. This is the earnings. Pulls back, and look at it's getting really, really tight. And he's talking about the 21-day moving average, which I believe is most likely this line right here. No, he's saying the 21-day moving average is catching up. Yeah, so that's going to be this yellow line right here. And this is what he means, guys. He's letting that 21-day moving or the 20-day moving average catch up to this. It's holding, it's getting really tight. He's expecting this thing to blast off here. So what is he seeing? He's seeing a very large trend on this all the way from back here. You can't see where the last line is, but that's where he's pulling his trend from. And he's not worried about all the spaghetti moving averages. He's not saying, oh, the 10's crossing the 21. All he sees is the price action here, and that the 20-day moving average is holding right here. It's trending on this 21-day moving average, or the 20-day moving average, or the 10-day moving average, and it's letting this 20 catch up to it, okay? And then he's expecting this thing to break out. SQ, he's saying he sold this yesterday, but he's thinking about buying it back up because it's still kind of just consolidating. It's been just grinding higher. If it can get in early, it still could be a good setup. So look at this. This is another one. Huge push up higher. And now look at this high tight flag. This looks like it could use a couple more days. My words, not his, but a couple more days here, as Covey loves to say, a couple more days here. But look, it's following this 21-day moving average. Every time it comes down, it bounces off this 21-day moving average. And now look at this high tight flag. Christian Koulamagi is looking for this thing to break out. He said he stopped out of it. I imagine he stopped out of it right here. Why? Because it closed below the 10-day moving average. Now he's saying if it breaks out again, he's willing to take it. Okay, so it looks like he probably took this trend break over here, right here on this daily trend break. He took the trend break. He's got a mark right here. He maybe have added right here on this small flag here. And then now we're in this new high tight flag pattern, and he held on to most of this and then sold when it closed below the 10-day. Now, if we look at the hourly on this side, you can see it a little clearer. Huge push up, huge pull back, but it starts to hit its head on this moving average, or on this trend here. Now, this is the hourly, okay? Starts hitting its head on this hourly and then starts to get tighter. So he's waiting for this thing to break out again and start to take off. So it looks a little cleaner on that hourly. DT looks like it's gapping up, reported earnings a couple days ago, had a flush, built another higher low, undercut the 50-day, and reclaimed. So now it looks much better than it did before. So he's saying a few days ago, earnings came. Here's the earnings. He's saying it undercut the 50. So I'm assuming the red line here is your 50-day moving average, okay? He's saying on earnings, it undercut the 50 and then rallied higher. This is something Covey and I like to see, an undercut and rally. Now, for a while there, we were both a little nervous about taking those undercuts and rallies, but after you've been training your eye and following these stocks, even after they undercut and you think the move is over, it rallies back up by the next day or by the end of that day. That's a huge bullish sign. That means whoever the weak hands were that sold off before it breaks the previous low, the higher low. So here's the low, here's a higher low. Now it creates a new higher low after it undercuts and then rallies. So he's looking at this to get tight again and break up higher, okay? So this was following a nice 20-day moving average, and then it broke down below, but is still holding that 50, bouncing, holding, bouncing, holding, bouncing. We also want to keep in mind Christian has a humongous account. He doesn't take high average daily range setups. he has to get tens of thousands of shares. So he's taking a lot bigger stocks than we do. Okay. This is 11.8 billion market cap, and the average daily range on this at the time is 5.8. So it's still fast, but it's not a 20% mover. Okay. He can't take those very small caps. It's just, it doesn't have enough liquidity in it. All right. Any questions so far, guys? We're just training our eye here. We're just training our eye. Kilgore. What's up, Night Owl? Good to see you in here, buddy. All right. Next up is Tesla. So let's see what he's got to say about Tesla. Tesla has been showing a RW. It's not really gapping up a lot considering QQQs, but if it starts to reclaim this mid-high 1540 area and hold, it could have a big run and go to 2000. All right, so he's talking about this big move up, but he's saying after looking at the QQQs that it's not really running. It's not really running up. Now, personally, if I were looking at this, I wouldn't say it looks the cleanest setup, but if you just imagine a line coming down from here, like a trend line here, you can see why it would be considered a trend, but it would need some more days to test that trend and get tight, right, on that 20-day moving average. But he's just speculating, because if we look at the hourly, now you can see the trend a little better. From here down, he's saying it's not really doing much here. With the QQQs looking like it's flagging and it's going to break higher, this is just kind of trading sideways, you know? So that's his observation on Tesla. Let's take a look here. So here's another Tesla, talking about Tesla. So pins. So check this out. Pins may, but I just don't need to see the beauty in their report. There was no big beat. So I think this here, he's actually talking about an episodic pivot. So we're not going to go over this because it's an episodic pivot trade and we don't want to confuse you. We're only going to focus on trend break strategy today. This is, he shorted Apple here. Or no, this is American Airlines, sorry. He shorted Save. Let's see. Save 50K shares. These things are so weak. So he's shorting the airlines in this area. Okay, we don't need to go over that. SRNE, straight up. This thing's 20%. Hey, they got an upgrade at HC Wainwright. That means an offering is coming, I guess. I'll have to sell a bit. So he almost up 8%. So it looks like he took this trade, but this isn't, I don't, oh, okay, right here. Okay, here we go. So check this out. This is the trend he's talking about. Huge move up here. Huge move up. Look how big this move is. Okay, it goes from $4 to $10 in 2 days. All right. Then it comes all the way back down here and starts to form this trend. Here's an ascending triangle, and it starts to ride this 20-day moving average. Okay. It gets really tight. Adam, you'll like this one. See how tight this gets, guys? After this humongous move, all this volatility, all this craziness going on right here, look how tight this thing gets right here. You like it, Adam? Does it look good?
Yeah, it looks really good.
So this is
Really good.
This is exactly what we're looking for, because if we look at his chart, you can see on his chart, this is going to move 9.8%, it says. Its average daily range, okay? 9.8%. This will make an account. Imagine grabbing 1,000 shares right here, guys. You know, that's 1, 2, 3,000 shares. You know, $3,000 after it hit $8. Then look, it forms another trend here and breaks out higher. Okay, so we would have already accepted a lot of this move. We would have already got into R on this, and then brought our stop up to break even. So this is absolutely beautiful. It's a beautiful move. Very fast mover too. And in this, he's talking about, you know, that they have an offering coming, so he wants to sell more. Meaning they're going to dilute the shareholders. And if you guys don't understand any of that, that's okay. You don't need to. Just know an offering is bad. An offering means they're going to dilute your money. Okay? Dan, Bob?
Yep.
Yeah.
Can you go back?
Yeah, sure.
So on that huge move up that we keep talking about, I do see the pattern clearly, but in my mind, I go, doesn't that create a bunch of bag holders?
Up here? Up here you're talking?
Yeah.
Yes, absolutely. And that's why I like to use the VWAP area. But even with a bunch of bag holders, you need to understand that those bag holders, as long as there's volume, you're going to see that they will get taken out. So here is the same area he's talking about, I do believe. All right. So let's just take a look at this. Now, before I look at anything else, I'm just going to mark this area. So what is this? Here's a huge bump of volume. Here's a huge bump of volume. The highest average right here is right here before it fails. This is the highest price of average, okay? So this we'll just call it $8, okay? I'll just mark it at $8 so that way it's the psychological area. So that is the highest point and the highest volume weighted average price, meaning the most shares were bought and sold around $8 on average. There was plenty bought and sold at 9 and 10, plenty of bought and sold at 6 and 7, but the average person who holds this share is about $8. So now you can see it comes back down, it trades sideways, and it comes back up. Look at this. Boom. It gets up into that $8 area. It even pushes through for a minute and then pulls right back down. It's not magic. It's literally the bag holders. All right. And I literally just picked any spot. Okay. Now, check this out. This is what gets even cooler. So now we've seen where the average biggest bag holders were on the VWAP area in the daily time frame. We've seen that it pulled back. Guess what? It retests it. It pulls back. Now it's creating new higher lows on a 21-day moving average. So boom, it tries to get through. It can't because there's bag holders. It sells off. But it makes a new higher low. So here's a low. Here's a new higher low now. And now look, it wants to try again. It gets a little bit higher and it pulls back. And look, it creates a new higher low. That's 3 new higher lows. And now check it out. It decides it wants to test that $8 area one more again. And look, it does it on volume that day. Higher than average volume that day. And it breaks through. And then look what happens. Boom. It takes off. Okay?
So we're exhausting the bag holders? Is that what we're doing?
That's exactly, yes. You're absolutely right. You're exhausting that liquidity at $8. And that's what it takes. It takes volume to neutralize volume. I call this volume neutralization. Okay, so when you're looking at a base breakout, a lot of times it's nice to know where that base breakout is. And that's why when I look at, what was it? Was it NNE? I think it was NNE. No, NNE's new. So look, that's why we love these high flyers. There's nobody overhead. There's no bag holders. There's nobody to sell into this. But there was a stock, was it ASTS, I believe? Let's look at ASTS. Yes. So I have all these areas on my chart marked out where that liquidity, where the bag holders would be. So I look at the volume down here and I can see there's a bunch of volume right here. So I mark that area out. So look, right here's that area. 1, 2, 3 areas right here where that is liquidity. That's where the bag holders are. Now, look where we're at. We come right up into it and boom, we smack right into it. I knew we were going to have a pullback. I knew it at 1226. I knew there was going to be a pullback here. But guess what? If it continues to hold this new 10-day moving average that's well above my buy-in area and well above my add-in area, then guess what? It holds this 10-day moving average. It's probably going to bonk its head a couple more times, maybe form a base here, and then guess what? All my flippin' friends, all my Discord pals who couldn't get in now have an opportunity to, because communication is still a hot commodity. Okay? So this is how we start forming those bases, people. This is how we're going to break out, and we're going to get above this $12 area again. And then where's the next spot? 14. I have that marked out. Why? Because not only is 14 a humongous area of volatility right here. Look at this. Anchored VWAP right here. I didn't mark the top of this, 1540. No, I'm marking the anchored VWAP where the average liquidity holder is. Now, if we go back over here and we look at this push-up, you can see a lot of those bag holders got taken out. So that might be liquidity neutralized, but everybody and their father can still look back on this chart and see where that price action was. So whether the liquidity got neutralized or not, there's still going to be some psychological area to get through when it comes to not only the $14 area, but a previous high and a liquidity pool. So our next stop, $14 after we break through 12. Does that make sense?
It's great. It's awesome.
Good. I'm really happy that you brought that up. So thank you for that. I appreciate you. Now, guys, we have about 20 more minutes. So if you have any other questions, make sure you bring them up, because that's what I love, Bob. I really, really like what you're doing there. I really like what you're bringing up. I really am happy we were able to go over that liquidity pool. Those liquidity pools are very important to know where they're at, because then you're not surprised. Like, even if I didn't know where that was, I'm still going to use my 10-day moving average. But it's at least nice to know that I have, or at least it's nice to have an understanding of why it's pulling back. We could say, oh, well, it's just extended, that's why it's pulling back. Well, no, it's not only extended, there are people selling off into it. And if that sell-off turns into panic, well, that's another good reason why we need to get out or take profits, right? I mean, I could have taken profits there, but I'm already down to half of my share size. I've added into it for this push. I want to hold on to that money until it breaks below that 10-day moving average. So, it's that simple. PDD, it says, looks good, showing relative strength, and it's in a good chart, though. I'd prefer more sideways, I guess. So he's looking at this. He'd like to see some more sideways action on this stock. I don't think it looks clean because it broke this area. I'm not going to argue with Christian. If he wants to see more sideways action, that's fine. But when I see this and it starts to break down, I'm not looking at this stock anymore. Unless we form a new trend line and it keeps bouncing off the 50-day moving average, but it broke through this, it kind of traded sideways. And if we look at this area over here, it just looked kind of sloppy to me. This is kind of the breakout area, and then it came back in, breakout, came back in, broke down, so he's saying he'd like to see some more sideways action, maybe to form a base here, form a base. Well, it bases out around that $90 area, but this thing just ran to that psychological $100 area, and so it's needed some time to trade sideways. TDD. So this says also really strong. Really like the chart on TDD, just breaking out a little bit of a flag here, and it's showing relative strength. If you guys don't know what relative strength is, that is the RS rating that we bring up on these charts, okay? The RS rating is right here in blue. You can see on my chart here. Let me zoom in for you. This right here, guys. This blue, it says 99. That's why we talk about RS so much. It doesn't just show up in Christian Quilamagi, it also shows up in William O'Neill. He wants you to be in those relatively strong stocks compared to the market, okay? So TDD, it's showing here, it's showing a flag, all right? He likes these flags. We like these flags because he's making a ton of money. He says, I think it's good. It's not the type of setup you can just buy and hold for several months. It would be more like maybe a hold for a week or two, but it depends on what the market does, okay? So look, same thing, big move up, a pullback, it starts to create a trend. Now look at this, he's not overwhelmed by it, but it did break these moving averages, okay? But it's still holding the trend. You can see it broke the 10 and the 21, but it's still holding a trend. Now, personally, I'd like to see a few more days on this, but you can see, and this is how he's making his trend lines. Isn't that kind of crazy? See, I would pull my trend line off the top of here. That's why it's discretionary. Like, no one person is going to say, this is how you draw a trend line, okay? Everybody draws them different, especially Christian. He'll really confuse you on these, okay? He may have drew this out a while ago, or maybe did something that he planned on taking. But look at this. This is more something that Covey likes to take, where it's following a moving average, and then it keeps smacking its head on one area. And then we get a, what is this? I'm actually asking because I totally forgot.
Shakeout day.
Thank you, Covey. This is that shakeout day. There's a couple names for it. Shakeout day, undercut and rally, I think is what I was calling it earlier. But you get this big pullback and it clears all of this area out. All the stop losses get hit. Yes, There are market makers. Yes, there are people that are liquidity hunting, okay? There's reasons for it because the big guys don't want you to sell into them. They want to be the only ones selling to people over here. They want to be the only ones to sell. So they're going to shake you out and then get bought back up because they're selling it down. Then everybody else sells and they're buying all that liquidity right here. They're buying all of this. So that way when it heads back higher, they can sell out into you, okay? So here's that shakeout, and here is that base breakout, or a trend. You can call this a trend breakout too. This to me is more of a base breakout. Either way, Christian just calls them all breakouts, okay? He calls them all breakouts. They all look a little different. We try to decipher this being more of a trend, this being more of a base, okay? Either way, we're making money, baby, all right? So this looks really, really good. I really like this breakout here. This was on a 4.8% average daily range stock. We got about 15. So he says, I bought 6K shares on TDD, like $1 spread. So it's pretty spready on this. It looks something like this. Things will stop me out. Too bad. Was really a 4.5 star setup. But sometimes when the market doesn't agree, it doesn't matter how good the setup is. It's not going to work. It ain't going to work. Okay, so he's saying, you know, he really liked the setup. It was a 4.5 setup. He got into this thing on the breakout, and he must have stopped out at that break even right there. So he took a small loss on this trade, and he's not sweating it. He don't give a shit. You can see it right here, guys. He took this bait. I think he probably took it right here. I can't really say for certain where he took it, but here's a trend line here that he formed. Maybe he took it here. Maybe he took it right here, risking this low of the day. Either way, he stopped out on this trade. The biggest guys don't have a crystal ball, you know, even the biggest, best guys. Here's Roku. He said he bought 16,000 shares. The thing is so powerful looking, he said. So now look, this looks absolutely beautiful. You can see on the daily, we have a huge trend down here. The moving averages look like spaghetti, but when it breaks up above that trend, what's it form? Well, we got a huge push up on volume, and then it starts to trade within this ascending trend line, okay? Ascending trend line. This trend breakout happens right here. That's absolutely beautiful, says. He loves this. He loves this. And it looks like he's got a red mark right here. I'm assuming that's where he bought, was on the daily trend break. And now we're seeing a tighter, high tight flag form just above that. He doesn't say what price he bought, but I would assume that he bought either here on this day, or he is buying here on this area, this trend break right here. I would assume it's on this day because of the volume down here, guys. So if we look at the volume down here, you can see much higher than average volume, and you can see that's where the breakout area is. So I'm assuming he bought it here where that red line is, okay? On the hourly, you can see it's much better, that same red line there where the volume came in on that hourly. So it's a beautiful breakout higher. He may have even taken this on an opening range breakout as it moved up higher, and now it's just forming. I mean, look at this hourly. This is why we like looking at these hourlies, guys, because this hourly is just so clean. So clean. And now as we're getting another push up higher through there. Okay. So here's Jumia. So JMIA, actually, we're actually looking at this stock just a couple days ago. It's unfortunate because JMIA looked like it broke down the next day, but you can see we started to get a nice trend line here at the top. So we were going to keep an eye on Jumia, but you can see, you know, it was a good trader back in the day. This thing had quite a bit of juice in its tank. New IPO, came all the way back down to here, these lows, big push up higher and started to trade higher. Not much of a play in these that I can see just off the top of my top of the head here. But we were watching Jumia for another setup, and it didn't work out, guys. That's part of the trading. You can see here, this made a nice move higher on earnings and then started to trade sideways, and you could call this a nice breakout right here because it followed this 10-day moving average. Nice. And then we get we get a nice breakout on volume. It heads higher, and it would have closed you out right here. So that would have been a nice move there. But we were looking for another big push up higher, and then maybe a trend to form like this. This thing really just backed down, and now it's back on that 21-day moving average. So unless it starts to shape up and trade sideways and gets tight, I don't really care for it because that's large selling volume there. So he's liking Jumia back here. Remember, this is back in the day. This is like 2020 or something when he was doing this. And you can see here, we get this big push up on volume right here. This was, well, almost 4 years ago. Almost, it's 4 years, 3 years and like 11 months ago, guys, is when this was, okay? So it pops up on higher volume, it pulls back, and look, it creates this mini trend line here, gets really tight on that 10-day moving average, and when it gets really tight like that, it breaks out higher, and that would have been a beautiful trade. And you can see it right here on the hourly as well. We get a big push up higher on higher volume, and it pulls back, it starts to create a nice trend line, and then it breaks out on higher volume here. Here's the higher volume. And it breaks out, and then you can just see, look at that. That thing gets to running, you know? It's beautiful.
Hey, Dave, I got a question.
Go for it, B.
Would that be considered to break out above the necklace?
I don't use words like necklace. So if you're using a terminology like necklace, you might have learned something that I haven't. So can you explain to me what that means? Like the smiling face here? Like the smiling face? This?
Yeah, it was in Weinstein's book when he was
Okay.
talked about the. I'll have to look it up now so I could actually tell
That's
you
okay.
exactly what I meant. But
That's okay, but are you talking about something like this? Where the gradual curve and then a big push higher?
Yeah, it goes from where it starts sinking down to where it starts curving back up on the daily, like basically where that white line is going
Okay,
across.
Yeah, right here. Yeah. So I can
I'll
understand.
send you something.
I can, yeah, you can go ahead, send me something. So, so when you guys read lots of different books, there's lots of different terminologies. You'll find over the course of the past 100 years, you're going to hear a lot of different terms like dead cat bounce, necklace, breakouts, trend breakouts, base breakouts, undercuts and rallies, a shakeout day. You know, we have already went through a couple of these today where I say one thing, somebody says something another, but a lot of the times, a lot of these terminologies all come into the same thing. I've heard that same necklace saying as the smiling face. You know, you buy a smiley face, you sell a frowny face, right? There's so many different terminologies, but it's what works with you. It's whatever helps you remember. It helps whatever helps you understand the market better and identifying these patterns. Okay, so I'm sure we've all heard of different terminology, and none of it's wrong, none of it's right. It's whatever helps you understand the market. Okay, so if you're seeing a necklace here, you might use that necklace that you're seeing to add to your conviction to the breakout, you know, and then play a base breakout on this or play a trend breakout on this. Okay, either way, as long as it's helping you understand that market, I would have to agree with you. Okay. So next up we have, and we're only going to go through one more, and then this is only the first page on his swing trading school, guys. We have so much more that we can go over. That's why we really encourage you guys to watch this stuff, okay? And this is a very hype stock like Amazon, SQ, PayPal of Africa. So Amazon is the SQ, PayPal of Africa. This is a great setup when you have a big Momo stock. This is a micro small cap, but it doesn't really matter when you have a Momo leader. This is a Momo leader. It was one of the biggest winners of March lows, started flagging, gets really tight, and has a high volume breakout. That's exactly what you look for. Memorize this pattern. This pattern will make you millions. Trust me on that one. Now look at it. It's up like 60, 70%. Okay. So he's talking about JMIA. He's talking about this pattern right here, guys. He's talking about this trend where it's coming up. It makes a big, look at the volume. It makes a big push on the volume. It makes a high, tight flag pattern here and then breaks out. Now look at this. It goes from that $8 breakout area and it's already up to 14. $2 more, that's going to be a 100% move, guys. You know, that's huge. That's huge. That's what he's looking for. It's as simple as that. And guess what? What happens if it doesn't work out? Well, we have all the things that are convicting, right? We have big volume. We have the volume sell off. Then we get a big blurb of volume here. We have a trend. We play the trend breakout. Well, guess what? We have opportunity to make all of this flipping money. Where's your stop loss? Either low of day or low of previous day. So you're willing to make $8 per share and risk what's looking to me like 50 cents. That's a huge risk reward, you know, and he's always going for 10x. He says it's not even worth trading unless you are going for 10x. Meaning if you're risking 50 cents, you want to see $5 minimum, guys. All right. So this guy has made, I think he's hundreds of millions now. You know, he like, I'll ask ChatGPT right now. How much money does Chris Quilamagi have? His net worth in 2024. It's searching because I definitely did not spell his name right. Yeah, no, it says I need to get his spelling right.
It was 80 million last I heard.
80 million? Okay, yeah. But that was during the that was actually on that interview, and that interview was from a long time ago.
Yeah,
you know?
it was a couple years ago.
Yeah.
Can you please website on the resource center? We have the video for this, but I don't think we actually have the website. Okay.
I'll put that on there right now, guys. So guys, if you are not aware of it, I'm going to bring this Discord up for you so you can see it. If you go into our resource section, which is right here, and click on that resource section, you will see we have so many resources here for you, including what we just went over today. There are so many more pages of this, so many more pages. We also have, you know, reasons why you should be a positive trader. We also have psychology. We also have the episodic pivot. We also have so many free books. Every trading book that you can think of is in here. It's all here. Here's Chris Quilamagi's trading school. We only went over a very small portion of what we did. I suggest watching this 40 times. Okay, after you watch my videos, of course. We also have Trader Sync, which you can download that. I think you get the first month for free if you download using my thing. This, you can input all of your trades, whether there are swing trades, or I'm sorry, whether they are paper trades or not, guys. If you're new to trading, you can do so many cool things with this, and it helps me out too if you end up paying for it. You can find free versions of this online. I'm not trying to sell you on anything. You can find free versions of this. Same thing with TradingView. You can use this absolutely free. If you like seeing me use this, we also have a video. Why that's not in the resources yet, we'll put the video in the resource section too. But we have a video on how do we set up our TradingView. You're more than welcome to click on this resource and download this for free. If you want the essential plan where you get a little bit more things with your charting, it helps us out, our community out too. We also have some of my favorite interviews on here. We have the base breakout strategy. We have the trend breakout strategy. And of course, Dan Bob was nice enough to set up our new Facebook in the resource section. If you guys use Facebook, go on Facebook. He brings up quite a few cool little things that we don't usually talk about in our Discord. So if you guys want to be a part of that, go ahead and click on that as well. So I think I'll close on that. Guys, I do always want to tell you guys, our YouTube is kicking ass. We've been working our butts off. The whole community has been working their ass off on this. I just want to say thank you. Thank you guys for showing up to these. Thank you for being here, asking good questions. You guys are the real ones. You're the reasons why we do this. This is why we work so hard. And remember, guys, if you keep showing up like you have been, you're going to continue to learn. You're going to continue to trade. And you're going to continue to learn from your mistakes. Because remember, you are a loser unless you're learning. So make sure you're always learning something while you're here. Okay, guys? And when we see a stock like this, we want to let it rip, tater chip. And when we see a stock like this,